What's up, Banter fam? I'm your host, Miles, and today we're going to be looking at the week ahead for crypto. I'm going to be running through the key macro dates, the key crypto dates that you need to know about to be prepared for the week, and I'm also going to go through 3 altcoins that I'm currently looking at buying, given the recent pullback in the market, because I believe that these can be the strongest narratives if we do get a bounce. And of course, we're going to talk about whether we will get a bounce or not. I've got some pretty telling charts that I want to show you relating to the volatility of crypto, which we've actually seen compressing over recent times. Typically, that's an indicator that we see expansion, which would obviously lead to a big market move. And then also that would happen in confluence with what we're seeing on the Bitcoin and the Ethereum charts in terms of their major trends as well. So lots to talk about in today's show to prepare you for the week. I'm heading over to the US tomorrow, so this will be my last stream for a couple days, although I will have a pre-record coming out. So I want to jam-pack a lot of information into today's show, so you're prepped for the next few days, and then I'll see you on the other side for a stream in a few days. So basically, the key events in terms of the macro, that's where we're going to start. We have the retail sales data on Tuesday, housing sales, jobless claims data, retail companies report earnings. In my opinion, not really a huge week from a macro perspective. If we just look at pure data, we obviously had CPI last week that caused a lot of market volatility. Remember, we had the market moving upwards actually when the CPI data came out, and then also we had a reversal shortly after due to all sorts of news. We had the Binance FUD, just a very manipulated market last week, and that led to general volatility, and then that volatility has now compressed heading into the weekend. That's something that we typically see, but in terms of the data this week, it's by no means as big as last week. The only thing that is bigger from a macro perspective, in my opinion, is the fact that we have 14 Fed members speaking. We have Bostic, Kashkari, Barkin, Cook, the list goes on, and then Powell on Friday. So this is a pretty unusual week for macro when you get so many Fed speakers all speaking in the same period of time. So I'm very interested to see whether the narrative that they push is cohesive, it's coherent amongst all the speakers, because sometimes what we see is the narratives getting a little bit tangled and kind of different speakers presenting different things. So it'll be interested to see what their view on inflation is, what their view on policy is. If they come out more hawkish this week, more dovish, I think that will be a little bit of a driver behind the stock market. But since it's not quantitative data, since it's mostly just kind of opinions being spoken, I don't think it'll have such a substantial effect on the market compared to things like CPI, things like FOMC that actually have like a tangible net impact on the market. So just something to keep your eye on, the amount of speakers if we do see some news crop up throughout the week, although I expect it to be very similar from the last FOMC, which is basically a Powell starting to be a little more dovish, obviously still trying to come across as hawkish and, stating that the number one mandate is to fight inflation, but just teasing a little bit, hinting a little bit at the fact that we could start to get rate cuts this year. I mean, he didn't explicitly say that, but that's what the market is expecting now, with the probability of rate cuts being priced into the probabilities heading into future FOMCs. The other thing that we need to take into consideration is the macro from a company earnings perspective. We do have a lot of earnings this week. Earnings so far have been very strong though. So Q1 earnings across the board, we had Amazon, Google, Facebook, Tesla, Apple, all those were quite strong. But now we're heading into the second crop, which is a smaller yet more retail focused crop of earnings. So one thing I'm keeping an eye on is how retail sentiment's been impacted, because we know we've got big people like Walmart, like Foot Locker. These kind of more retail-based companies give you an idea, and that's also in confluence with the retail sales data that we get on Tuesday, an idea as to what the consumer sentiment's like in the US. It gives you an idea as to whether people are spending. We know when it comes to crypto markets as well as stock markets, the amount people are willing to spend, the amount of discretionary income that they have available is a big constituent of market movement. So it'll just be an interesting thing to note how the retail sales have been and how the earnings have been for these companies. We also have Target as well. Many of these big retail-based companies. We've already had the tech ones. They came out above expectations. The market was very wary heading into Q1 earnings. Like, a lot of the expectations were much lower than what we actually saw, because obviously we had a lot of the supply chain issues, especially on the Chinese side during the pandemic, now starting to subside a little bit. That does help ease market conditions for a lot of companies, maybe more so than was previously anticipated. But now you also have heading into future quarters, the effect of the interest rate hikes now starting to be potentially impacting upon these companies' earnings. So we didn't see it in Q1. Whether we see it in Q2, Q3, the real effect of those interest rate hikes, we're yet to see. All we know right now is that Q1 was quite strong. I do think earnings at some point will weaken. The question really isn't whether they'll weaken or not. It's more, does the market price in fully the extent that they will weaken? And that's a very hard question to answer. Then people, make their living trying to answer that question on the stock market. So I'm not going to attempt to today, but that obviously is the number one question on investors' minds. Now, heading into crypto dates, away from the macro stuff, so now you guys are aware of what's happening for the week from a macro perspective. We'll look at the crypto specific stuff. Not a lot of stuff, but a few things you got to keep your eye on. The first thing is, as we talked about last week, keep your eye on the unlocks. May still that has $700 million worth of unlocks for the cumulative month worth of unlocks. It's the biggest unlock month for crypto, more than January, February, March, and April, which means it is a month of supply overhang. There is supply coming onto the market, but for a few specific tokens, we have the Blur airdrop. Then you also have the Avalanche unlock as well. We also have the Optimism airdrop, Optimism unlock, which is quite substantial towards the end of the month. And I think we also have IMX as well. There are a few big ones. Go into token unlocks or unlocks calendar to have a look at them. Once again, we went through our analysis on the unlocks last week. Just something to keep your eye on. Also, APT as well have their unlock. But we also have a few interesting key dates to watch out for. Actually, in a few minutes, I'm going to show you about the most key date of all, which is on June 1st, that we need to talk about. But I'll save that for a few minutes because that needs its own discussion. But just off the surface, we have the Sol Saga release, which happened last week. This week, we have the Amazon NFT Marketplace launch. This is happening tomorrow. We have the Gala V2 snapshot. We have the Sand Mega City 3 auction. I mean, not huge stuff here. Pretty much a dry day on Tuesday, apart from macro stuff. Then we have the Ape Token Unlock, Bitcoin Conference, of course, Bitcoin 2023. I hope to see you guys there. I'll be heading over to the conference in a couple days. And yeah, if you are coming, come say hi. We're going to... Actually, if you buy a ticket through the link in the description using our code, you will get to go for a dinner with Ran, me, Sheldon, Carl, all the hosts. We're actually all going. First time we've all gone to a conference together, so it should be a lot of fun. So if you're there, come say hi. If you're in Miami, even if you're on the East Coast, maybe find a way to get down, because it'll be a great time and you'll get to meet people in the industry. I actually made a realization on the weekend, and not just on the weekend, but I've thought about this before, and that's the importance of networking in crypto. I just think it's such a powerful tool we have in crypto, having this strong community. It's pretty much unlike any other industry, and the benefit you get from meeting people, networking, making connections in the space, it's huge. And obviously it's big for creators and project owners and people in the space like me, but for just normal people as well, I think being a part of the crypto community is a really helpful thing, because you'll get access to whether that be deal flow, alpha, information that the public wouldn't get access to, and you'll also just find it a lot easier to actually stay consistent with your approach to crypto if you are networking with people in the industry. Now, I'm not saying that you have to go to Bitcoin Miami or a conference to network. No, you can actually do this online as well. So don't underestimate the power of getting into Telegram groups, getting into Discord groups, talking to people. Oftentimes what you'll find is once you start going down the rabbit hole, it'll lead you to something totally new. So you'll find projects through being in the Discord of one project, just from talking to people, and you'll eventually find niches that you're really passionate about, and you'll find other people are passionate about that too. So obviously the conference, like the Bitcoin conference, is great for people that can go, and that's one example of real life networking. I really don't think anything replaces real life networking, but then you also have obviously many opportunities with just how influential the internet is in our daily lives these days, to actually network online and join these communities and do that online as well. And maybe it's not as good as real life, but I think a combination of both is great. And if you can't make it to conferences in real life, then feel free to do it online. And I actually would tap into some of these conferences and watch them live. Just go through the agenda for the conferences, see what speakers you're interested in hearing from. A conference like Bitcoin Miami or Consensus, these other big ones, they have pretty prominent speakers and really interesting speakers as well. So I would definitely check that out. But apart from that, the rest of the week is looking pretty dry, actually. Pretty dry week for crypto news, but pretty big week for a few select narratives, which we're going to get into. Before we get into that, let's talk about the charts in general. Let's talk about the thumbnail of the video, which is actually the volatility index, and kind of get a feel for where the market could be heading. So what I want to just firstly establish is Bitcoin has had 9 consecutive days of downtrend until today, which actually was our first bullish candle. So we had, you can see here, 1, 2, 3, 4, 5, 6, 7, 8, 9 candles. We had our 10th candle, flipped bullish. We had a bullish close for the day. So far today, we are slightly in the red, but this could change at any moment because, you know, the candle's just begun. Actually, now we're ticking up into the bullish territory for the day. So I mean, just keep our mind. Actually, technically, we are down because we had a close here. And yeah, but it's basically flicking between. I mean, it's basically flat because it's literally just changed right in front of us. So we had 9 days of downtrend. We had a bullish daily candle, and now we're starting to form our next candle for the next daily open, which has just occurred. Of course, when the stock market's open, when we start getting some of these earnings throughout Monday, Tuesday, the retail sales data as well, that's going to cause some market movement. Now, in terms of Bitcoin's chart, what we basically established is a pretty strong support at 26.5. So this is my major orange line. You'll also know I had a blue box here before. I got rid of that just to make it a little bit cleaner on my chart. And basically, what you need to note is that 26.5 is still that key level on the daily that we're holding above. And until we close below that, so until you see something like this, which would be a breakdown, close below, retest, and then a rejection, this would be our indicator that we're coming down to 24 to 25. I think 24 to 25, just that general zone, that's a pretty strong support zone. A zone I'm interested in buying in. Of course, your next support zone is 23 to 24, primarily the 23K region. If you're playing out that head and shoulders pattern that a lot of people are looking at, which is the head, the shoulders to the downside. I didn't draw it right, but you can look at many charts. Many people have shown that the big head and shoulders pattern playing out on the daily and the weekly, which would basically take us back down to like 23K if you draw it up with the move to the upside and then draw it to the downside. So that, look, head and shoulders have a very low probability of playing out, and that's why I'm not really looking at it as like a substantial metric for where I think the market will go, because head and shoulders, they rarely play out to the fullest. Like, yeah, sometimes you get like a rough head and shoulders pattern. You'll see likely a strong move to the downside after the right shoulder plays out. However, this typically doesn't always bring you back to the original starting point of the whole pattern. So, I mean, I wouldn't base my entire investment thesis around that, but what I would do is keep a strong eye on 26.5. If we can consolidate above here and continue to hold, this was bullish, by the way, the fact that 25.8 was bought up, that was a good sign. If we can continue to hold here, you can make a strong case to start reclaiming some of these lows and start working towards this diagonal break, which is clearly going to be a major break for Bitcoin, which should happen towards the end of the week. So, you know, if we count 7 candles, 1, 2, 3, 4, 5, 6, we should start to get a break if we do get that move. Conversely, if you are monitoring the downside probabilities, what I would keep an eye on is whether Bitcoin can hold that level. And if it does break down below 26.5, then I would be targeting 24 to 25K. I still think the risk is kind of to the downside here. But what I did like, because you guys know we actually shorted this, I was pretty vocal about the fact I was going lower here on Friday. You guys saw it. You know, I did a tweet a couple of weeks ago, and I also did a show where we looked back on that call, and obviously it has played out to the downside, so we did catch this move, but what we are now waiting for is confirmation of the next move. And I do think risk reward is still, I don't know if risk reward is the term, but I do think probabilities to the downside, but we definitely could see a push up here. So that's what I'm monitoring for. And if you start reclaiming the lows, you push up, have a retest of these lows, then you can start looking at a breakout. And then we can actually trade that breakout. So it's really just about whether we can reclaim this level. If we do, if we can hold above, then we start making a case to reclaim. But still, the fact that we haven't reclaimed this area, this could just push up, end up being a rejection, or, you know, we could even break out to the upside and then get rejected off the diagonal, and that would set us up for a lower high to come back down. So basically, for me, it's something that I'm just monitoring because I can't predict it. You know, you can kind of look at probabilities and say, okay, probability is that we get a lower high and then we come back down and make a lower low. But that's just probabilities. Of course, the market can go against us and we have to be prepared for that. So this is something I'll be monitoring every day. But if we do get a bounce, there are a few altcoins that I'm looking at that I think will bounce stronger than the others that we're going to get into. In terms of altcoins, Ethereum's the leader of the alts, and this is still below its range high. What I would like to see from Ethereum from a bullish perspective would be a reclamation of the 18.5 level. Right now, it looks like this could end up being a test of resistance. Obviously, that rejection would take Ethereum down to 1650. This level, by the way, the 1650 level on ETH is a great level, in my opinion, to buy ETH and alts. So this, if we do get a drop, I will be looking at stocking up on some alts at this level. Of course, we're going to talk about a few of those in a second, but this would be the zone for me for Ethereum. It looks like that's a pretty strong support zone. We know this because we've had multiple tests of this area as resistance. Should end up being a strong support. Acted as support multiple times before the next leg up. Also, pre-merge as well. This was a key level. So, yeah, just that is a very important level. The 16.7 to 16.8 level on ETH. That would be a kind of a good, decent buy zone because you have that clear stop below. And on altcoins as well, you can probably line them up with the Ethereum chart, considering ETH leads a lot of the alts. Now I want to look at the volatility index. This is the thumbnail of the video. And the reason why I want to show this to you is because look at how this is coiled up. So look at how this has contracted into a very tight range and is now at a 51 level. And if you know what the 51 level on the volatility index means, it's basically not very freaking volatile. It's like, that means the market's very, very boring. We rarely ever get this low. In fact, we've only been this low a few times in recent times. April 2019, we were this low. In December, we weren't even this low. The next time we were this low was June 2020. Then September 2020. Actually, very interesting point here. On the volatility index, the two times that we had gotten to the 50 level were during pre-halving years. So you guys know the halving happened in 2021. 2020, which is equivalent to where we are in the cycle now, in 2023, was a pre-halving year. And it's just interesting to note that we had basically the same volatility level during those years before the bull run. So if you were of the thesis we're getting a bull run next year, then this would be lining up. Low volatility during a pre-bull run year is something to be expected, I suppose. But yeah, that's just probably just a coincidence, but still interesting to note. We didn't even get this low in 2022, even during the whole like Luna thing, and then FTX we didn't even get this low. We actually didn't hit lows on volatility until post FTX, when a lot of the dust had settled and people were scared. So here we are sitting in this position of no volatility. Now, I did talk about this last week. Low volatility causes low liquidity. That does have issues for the market. So a low liquidity environment means the price movements become a lot more jerky. So big swings to the upside, big swings to the downside, makes it a lot harder to trade leverage and trade crazy leverage unless you're being like very, very diligent with your risk management. It just makes it a more difficult environment to trade when you have low volatility combined with low liquidity. And, there's a cause and effect there between those two variables. So low liquidity is not great. We like high liquidity. Makes it easy to trade. Of course, when you start getting volume come in, that often substantiates trade setups a lot better than when you don't have volume and you're trading on setups that look good, but you don't have the volume to back them. So often you don't get that move. You don't get that adherence to market structure. So what we do want is the volatility increasing if you're a trader, of course. And I'm pretty sure the exchanges will want that as well, because they make money off an increase in volatility and they need high liquidity to execute. So I would just keep my eye on this, because every time we've had a period of low volatility, look what's followed. We've had expansion. We've had expansion temporarily. We came back down, and then we had major expansion. Even here, we didn't quite get as low as 60. We had expansion. Even after last time we hit 50, we had expansion. This time, at some point very soon, we're going to get expansion. So basically, the reason why this happens is because whenever you have a contraction in the market, that leads to greater expansion. So the more the market coils up, typically the more explosive the breakout becomes. And I think that's what we're getting right now. We're seeing volatility dry. We're seeing liquidity dry up as well. But typically what follows a period of contraction is major expansion. And whether it's a little bounce to the 73 level, that's still pretty substantial, by the way, in terms of a move, or whether it's bigger and it's one of these, explosions to the 127 level, we'll have to see. Obviously, there's a lot of macro components at play here that will impact volatility, but this is definitely something that I could see increasing. By the way, CVI, Crypto Volatility Index, this website, if you're wondering what it actually is a website where you can buy and hedge using a volatility token. So the CVI token is actually, you can actually buy it for $50, and then if you think volatility is going to increase, you could sell it for 120 theoretically. Or you can do the opposite. You could like short the token, borrow against it, short it on a borrowing and lending platform. So this is actually kind of interesting how it allows you to like enter vaults and trade volatility. So pretty cool tool. The only thing you have to keep in mind is you pay a funding rate. So when you're paying a funding fee, so every hour it's 0.09%, it makes it like not a great long-term hedge against volatility. So if you have a portfolio and you want to hedge against volatility, theoretically you would buy the CVI token, right? The only issue is if you hold it for a month, every single hour of that month you're paying 0.09%. It's quite a lot. There's quite a premium on holding it. So basically it's a better indicator. It's a better trade if you're holding it into an event. So you know a big event's coming, or you think the market is lining up for a big move, then you might try and hedge with the volatility index. But you don't want to hold it for too long due to funding rates. And it's the exact same thing with perp positions. When you're trading on an exchange, you can't hold perp positions too long because you're paying crazy funding fees. And it depends whether you're getting paid or you're paying to long or short. You got to keep that in mind whenever you're trading a token. But it's very important because that is your edge. It's sacred to protect your edge in trading. If you give away your edge too easily, just through funding fees, then there's basically no point in taking the trade. You might as well just sit in Bitcoin or stables and relax. So volatility, I think, will increase, basically, is the TLDR. If you want to trade any of that, like the move on Bitcoin, you can trade it on PrimeXBT. Actually been playing around with the exchange for Bitcoin trading. Pretty cool. I'm going to show you how to do this a bit more in the future. They've also got other pairs like, Polkadot. I can see Axie here, like a lot of the big pairs in the market, basically like a normal exchange. But it's a little bit different. I might do a tutorial to actually show you guys how to use it. I've had a few questions if you haven't used it before. But the reason we actually partnered with them was because they offer some pretty unique pairs. Like you can trade commodities like aluminium, gold, silver. You can also trade using like different margin tools. And it's just very different from other exchanges. So I think it's good diversity for the ones that like to trade Forex and commodities and that kind of stuff as well, because like something like a Bybit wouldn't allow you to do that. And if you do want to trade on PrimeXBT, by the way, you can use my promo code Miles20. Just click on the second box. This will give you a 20% deposit match, which means if you deposit, let's say $1,000, you actually get $200 in your account. So 20% of whatever you put, which is very, very high. Like it's pretty much higher than any other deposit bonus we've done on the channel. But there's only 100 people that are getting this. So I think 80 off the top of my head, last time I checked, had already, 20 had already done it. So there's 80 left. So you do have time to get this, but once the 100's out, we're not going to do the 20% deposit match anymore, which is up to $6,500, by the way. So you could deposit theoretically 25 grand and get like the 6 grand deposit bonus. So yeah, just letting you guys know that we're still running that. And there's a link in the description to PrimeXBT if you would like to use that code. And yeah, first 100 users will get the deposit bonus. Let's go forward now into the rest of the show. Lots of altcoin stuff to talk about. Saving the best to last, of course. Actually, I just wanted to know quickly. This is quite funny. 𝗔𝗕𝗃 said, an economic wave is about to hit that will be fantastic for investors. We never like to see this. We never, ever like to see this. This is the biggest, 𝗔𝗕𝗃 is the biggest counter signal in the market. So maybe that explosive move that we're going to get is going to be to the downside, because whenever 𝗔𝗕𝗃 says something, it's got us worried. So let's hope he's right this time. But unfortunately, he's usually wrong. So counter trade 𝗔𝗕𝗃. Maybe we start looking up. Maybe we start looking at short setups. Next thing I want to look at is dominance. Someone said, "Oh crap, yeah, I know, Jeremy. It's pretty worrying whenever he says that." Someone asked if PrimeXBT requires KYC. The answer is no, actually. So that is probably good for the ones that were, let's say, on Bybit and now have to KYC and don't want to KYC. Actually, I don't think you have to on PrimeXBT, which is good. But obviously, most exchanges are going to have KYC soon. But at least in the short term, it's all right for the ones that don't want to. Bitcoin dominance. This is actually very, very crucial. So, okay, it's interesting. We've had a market correction, but dominance actually rejected of 49%. So we haven't had yet a confirmed breakout above dominance highs. It actually tucked back in below the range. Now, right now, dominance is at a very crucial point. I'll show you on the daily. It's basically at its horizontal support at 478. If we break down below, have a bearish retest of resistance, dominance can come back down to like the 45 to 46 zone. So obviously, this is still a bullish trend. We actually did wick below, but then we're still holding above. So theoretically, dominance is still bullish. Probability says it's the more it tests 49, the higher chance it has a breaking. But there are, for the altcoin bulls, a couple strong signs. One, you have your lower highs. Two, you're now starting to test this horizontal support. And if we can test this, maybe it breaks down. And three, every single time we have hit 49, we've gotten rejected. So same again, we actually have gotten rejected, except this is more of a double top. Rather than a singular rejection, which is unique, but it just shows that the market, the market didn't want to go full Bitcoin mode, and I think that's just because it's a reflection of the fact Bitcoin had already risen 100%, and a lot of altcoins, like during that period when we did get dips, like they puked back a lot of their gains, or a lot of alts are now at approaching their yearly lows again, even though they've pumped hugely off the bottom. A lot of alts are now coming back down. And I think they were due for a bounce, and that's what we're seeing. So it'll be interesting to see. I think if Bitcoin pushes to the upside or holds, consolidates, I think alts actually outperform, given what we're seeing on the BTC dominance chart. I think the only time alts will underperform, just based on what we're seeing this week from the movement in dominance, is if we do get a huge market correction. I still believe if we get a huge market correction, Bitcoin dominance will increase, and that is probably when we're going to see that third test of 49%. But if Bitcoin USD holds, then I think altcoins can actually outperform, and we can see alts performing quite strongly. And that's purely this is purely based off ETH BTC and BTC DOM. And that's more of a shorter term thesis. Obviously, long term, dominance is increasing. You probably can expect the trend to continue to the upside, but at least in the shorter term, and it's not too short because we go back to 2021 here, we can probably expect this range, well, not just expect, it is still intact. So as long as the range is still intact, we can see movement on the extremities of each range. So yeah, something just to keep in mind here. Actually good for alts that Bitcoin dominance got rejected and we didn't see it blast away. And I'll talk about some of the alts I'm looking at in a sec. Got some alpha to share with you there. Speaking of alts, 𝗕𝗏𝗄𝗏𝗡 launched, and this is pretty cool. So I don't know if you guys have seen this, but it's basically like crypto bubbles, but different, because on the altcoins, if you click on an alt, you can actually chat. So I actually put a chat in here. I said CFX is pumping pre-Hong Kong. That's a big narrative I want to talk about, how we're getting Hong Kong legalization on June 1st of crypto, and that's the reason why CFX is pumping. But you can actually discuss why a coin's pumping in the chat. So on crypto bubbles, you just see the bubbles, whereas we've kind of socialized it, socialified it, to actually let you talk to people and work out why things are pumping. So you can just connect your Twitter account. You can see top corner, I've connected my Twitter, and I can go into any alt and talk about why it's pumping. So I could go on to 𝗬𝗎 and I could discuss it. Scam, only 5% of tokens released. 𝗬𝗎 scam, just another scam VC coin. And I could do something like, tokenomics are bad. I misspelled tokenomics. That's not even a word, that's why. And then I can enter and actually chat with you guys. So it's pretty cool. I expect big changes to come, which will probably, I'm going to actually suggest to Ran, who's kind of been heading the project, that we actually have like custom like replies, so you can like do threads within the bubbles. And I think we could also do like rankings, so the more you chat, you get rewards, all sorts of stuff you can do. But this is just like version 1, which is currently live. So yeah, switch those old bubbles out for the new bubbles. And yeah, I think this will be the best bubble site in crypto. I think it's tons of cool features coming for it. And obviously it's, got all the statistics and data there. So that's quite cool. Actually, looking at the bubbles today, we can see CFX performing well. Hong Kong narrative, actually very strong. Let's start there. Let's talk about that and what's happening with China. I'm going to do a tweet on this a bit later, but I'm going to front run my own Twitter on the show for you guys, of course, the loyal show watchers who watch every day with a bit of alpha. I think this Hong Kong crypto legalization June 1st could, if the market holds up, result in strong trading opportunities for a lot of the Chinese alts. Now, I'm not going to be buying Hong Kong or Chinese alts for the next year based on an announcement that's happening on June 1st, but I will look at trading setups if we get them. And I have a watch list for Chinese altcoins that I'm currently monitoring. CFX, I've been a big fan of CFX. Last time CFX pumped, we can see here when the Chinese central bank announced the liquidity injection through QE in December 2022, we saw a huge pump to the upside for CFX. It was actually a 836 move to the upside for CFX. Now, if we go onto the daily chart, we can see we have had a pretty strong pullback. We're below, we broke below what was temporary support, and now we're kind of, this looks like we're making a swing low at this level. Of course, there's not much TA you can do because the pump was so explosive. Looks like we're making a low. Start to reclaim the previous low, because if we just look at it here, we can see, you have your low, you have your lower low, you have your lower low. When it comes to breaking trend structures in crypto, the first thing you want is to break the second low. That's the first thing you want, and that's what we're starting to get now. So if we hold above on the daily, this is an indicator that these are your swing lows, and you can start to reclaim structure. In fact, it looks like an inverse head and shoulders. You see the shoulder, this is the head. We can push up to this zone, pull back, and then this pattern can play out to the upside. So that would be one idea of what can happen for CFX here ahead of this Hong Kong news. But it's good signs we're starting to break above, and I think this is maybe a decent one to trade, especially if Bitcoin holds. I think a lot of these Chinese alts are going to do well, not just CFX, but you have all sorts of coins that are showing similar charts that actually haven't run yet. COCOS is another one. I'm just going to go through my list now and quickly chart them for you. We're seeing we're still below. What we want to look for in general here is reclamations of these previous lows. That's what we're looking for. Filecoin, not the strongest coin that's synonymous with China, but that's one. Cortex. I mean, I'm just going through crap coins. Like some of these don't have Chinese affiliation at all. But the fact that people think they do, and the market thinks they does, or at least trades on them like they do, means you do get moves ahead of like big news in the Chinese and the Hong Kong space. So a lot of these haven't moved. CFX moved first because it's the biggest one. It's like viewed as the Chinese Ethereum. But I would start watching a lot of these. A lot of these are just below, but are now going to start breaking out. And when you get these breakouts, when you get confirmed retests, you can start looking at longs in confluence with the Bitcoin chart, of course. If Bitcoin breaks down, you don't want to be in longs, even of like China coins. But see, the patterns look very, very similar for a lot of these alts. Some of them have very strong diagonals as well that you can draw in. Every altcoin has a different trend, but it's just interesting to see the trends on a lot of these alts. And you can see I'm drawing in the previous lows. A lot of these are still below, but if they break above, I mean, all of them look the same. All of the Chinese run alts look the exact same, basically, on their charts. Some of them have like performed better than others, but most of them are still kind of in these patterns. And some of these are just blatant, probably shit projects, full disclosure. But I'm just, framing the trend here. Another interesting thing, actually, is that although the US M2, so money supply, declined because of quantitative tightening, the M2, so money supply in China and Japan, are actually up 1.76%. So in terms of general market liquidity, the Asian nations have counteracted the tightening from a global liquidity perspective that the US has provided. So Japan and China, those narratives, I don't think are going away, especially in the face of what is pretty aggressive regulation in the US and more lax policy now entering Hong Kong. I think we're going to start to see a lot more innovation out of the East. Hong Kong, with its June 1st legalization, will I think be a catalyst behind that. So I would not fade that at all, but I'll be doing a thread on that later. All right, just reading through the comments. I think we're good to continue. Stacks, another one that I'm watching. So Stacks is very similar. We want to see it reclaim its low. So we actually see, we had our highs, our lower highs again. And encompassing with that trend, we had lower lows. But if you could start to reclaim and break above, this becomes a very nice long. So that's my first long scenario for Stacks. My second long scenario is we reject we come back down, and then I'll long at 50 cents for the bounce. And I'll probably take some profits at like the 60 cent level, but that's still going to be a 20% move to the upside with leverage. Double your money on that trade. So that's what I'm looking at for stacks. I think the Bitcoin narrative is strong with ordinals, with BRC20. I like stacks as a project. Yes, it isn't powering the entire Bitcoin revolution. It's just like a Bitcoin L2, but kind of like the China narrative, it doesn't really need to. Crypto is all about narratives, and I think it's got a strong one, which is like helping Bitcoin scale. If it's going to have like a strong inscriptions BRC20 economy, it needs to scale. So that's one of the reasons why I would just monitor stacks. And yeah, these are my two trade scenarios for stacks. If you want to trade it, by the way, or trade any other altcoins, we still have the OKX Tesla giveaway live. So you do only have a week now. So if you aren't in this already, this is your last week to potentially win a Tesla. We've given away the Maldives trip. We've given away the city tickets, MacBook Pro, iPhone, all the other prizes. But this is the biggest one, $50,000 or a Tesla for anyone that signs up to OKX using the link in the description and trades $1. You get an entry, just $1. Of course, though, the more you trade, as per the raffle tickets breakdown here, the more raffle tickets you will earn. So for every $10,000 in cumulative trade volume, including derivatives, you will get an extra 5 raffle tickets that you can put towards, well, that give you an extra chance to win a Tesla. But obviously you can just trade $1 and you will still get 1 ticket. So something is better than nothing when it comes to this comp. But I just wanted to remind you that there is only a week to go in this comp. So this is your last chance to trade on OKX. If you haven't already, link in the description to that. It's going to be huge. I think Rand's going to give it away next week, and when he's back from Miami. So it's going to be massive, massive, massive. So good luck to everyone in that. I know most of you have already joined by now, but I thought I'd give you one more reminder. Or if you've already joined, that you can still, continue to earn raffle tickets. Who's winning? So the Bybit comp is based on like trading P&L. So you actually have winners there. But in terms of the OKX comp, there's no winner. It's just random. So if you build up raffle tickets, we'll do a draw based on how many raffle tickets you earned, and we'll pick a winner through a randomizer. That's how it works. Not who's winning the Bybit comp. Let's actually check who's winning the Bybit comp. I think I'm like 40th. I think I'm 40th. No, wrong one. Wrong one again. There we go. I think I'm like 40th. Let's see where the other guys are coming. I can't see Rand and Sheldon, but I can see. I can only see top 10. So we got a few. I mean, the 10th place is 179%. Top place is 1,200. We did see. Yeah, well, it always happens with these comps. The top guy, Reptilian, has dropped off. It always happens. They always get wrecked. They always wreck themselves. Reptilian, you should have sat on your gains for a top 5 spot and then like traded at the end. I don't know if you're watching, but this has changed a lot. So, I mean, in terms of the Bybit comp, there's still a couple of weeks to go on this. So you still have a chance. Actually, how long does it have to go exactly? 16 days. So you still have 16 days to trade in the Bybit comp to try and get a rank, obviously for the Tesla, Rolex, or the $10,000. So there's a link in the description to Bybit as well. OKX is the raffle system. So that's just based on pure volume, not P&L. Bybit is the trading comp that does rely on, P&L. All right, next bit of alpha, getting back into the altcoins. I want to talk about Lido quickly. Liquid staking, clearly a big narrative in crypto, one that I'm pretty bullish on long term because of the fact we've seen ETH staking ratio actually increase significantly. Look at this, by the way. Look at this. People said Shanghai was going to be a net negative for ETH. They said that the withdrawals were going to cause a dump. They said that this was going to be a huge supply overhang on ETH that was going to result in like a huge correction. There was a lot of talk pre-Shanghai, but all we've seen post-Shanghai is staking increase. So basically what I said prior to Shanghai was this will be bullish for liquid staking, and staking is exactly what's happened. The ETH staking ratio has increased, and it's interesting. I saw a tweet by Food Farmer earlier today, and he said, I used to think of Ethereum as digital oil, but now I think of Ethereum as digital real estate because of the yield-bearing potential that Ethereum has through staking. If you guys don't know how Ethereum works, the more fees that are generated, and we have seen an uptick in fees since the meme coin run, the more fees that are generated, the more yield is paid to stakers. So if you don't want to sit back and pay high gas fees, and you want to be on the right side of the gas fees to actually earn from them, you can stake Ethereum. So the whole protocol is designed to benefit stakers. Now you actually have the ability to redeem your Ethereum from staking off the Beacon chain. There's that extra incentive now, and especially with high gas, the yield on ETH has gone up. So it's a win-win because more ETH's burnt, stakers earn more ETH staked, reduces the circulating supply. We see the ETH staking ratio go up right now. From a monetary policy perspective, Ethereum is at a very healthy spot. From a technology perspective, you can make the argument it's not, because it needs a lot of work to get to a point where it's scalable. And obviously scalability will trump any short-term burn, because that's how you get users. But in general, Ethereum's, from a monetary policy perspective, is in a good place. That's probably because they have complete control over their monetary policy, unlike Bitcoin, which needs very complicated network upgrades, and that causes a lot of arguments whenever that happens. So Ethereum is in kind of advantageous because it's more centralized. Good and bad. Good and a bad thing. All right, but Lido specifically is now enabling their staked withdrawals. You guys know Lido had delayed like till a month after the Beacon chain withdrawals were initiated. So they were on a slight lag. We're now seeing them actually enabling withdrawals, which I think is good for Lido. If we look at the Lido chart, kind of looks similar to some of these China coins I was showing, in the sense that it did break down below its major support level. Yes, if this rejects here, that's bad. I think, you can go back down to $1.10 to $1.20. But there's also a scenario here where we break above and hold and basically retrace this down move and start to enter another uptrend. So with Lido V2 coming out, that could increase the staking ratio for Lido. And maybe as a result, we see price have a nice bounce. Of course, you still got to reclaim this level. So keep your eye on Lido and how it moves. You see this orange diagonal. We broke down from my level here, my wedge, for a 32% move since the breakdown of the wedge. So it has broken down significantly. Now it's time to kind of reassess Lido as we start heading up into this zone, if we can reclaim. The other thing is the liquid staking market. What I find very interesting is the majority of inflows are going into Frax and Rocket Pool. So I actually really like Rocket Pool as an investment still. This is one that I'm DCAing into. So this is more long-term for me, because I think of ETH staking as like a year plus play. Why? Because I think the staking ratio is going to slowly climb over a year. I think we're going to see something like this. See the staking ratio of ETH. It continues to increase, right? In 2021, it had 1 million ETH, and now it has 20 million ETH, and this is very linear. Obviously, we've had an uptick since the Shanghai, so we may go on a faster path now. But in general, it just keeps increasing, and it's very simple, my logic. I'm not trying to overcomplicate this liquid staking thing. I want exposure to protocols in the liquid staking niche that are capturing upside, so they're capturing inflows of ETH being staked, and they have decent tokenomics to back them up, so they can actually accrue value to their token through increased ETH staking. Now, if I think about that, and I look at the top 5, like what protocols fit that bill the best, Lido does it. Well, it fits the top bill, being like the number 1 protocol for liquid staking with 12 billion TVL. So yeah, we know money goes there when ETH staking increases, but what doesn't quite check out is the tokenomics. Lido being a governance-focused token with no like very substantial fee distribution, unlike Rocket Pool, which has like clear mandates for opening up pools. You need to hold Rocket Pool and stake it. You need to put it up as collateral. So there's kind of like an incentive for you to hold Rocket Pool there. Lido doesn't have the same thing. You don't really need the Lido token. So Rocket Pool and Frax, I probably am favoring now. At one point, I was favoring Lido just as the biggest coin. And I think from a TA perspective, Lido leads the market. So if Lido does well, the others do well. But from a pure tokenomics perspective, I see the merit in Rocket Pool and Frax. Unfortunately, though, Frax's LSD division is still not as big as their stablecoin division. So it's not a pure bet, whereas Rocket Pool is a more pure bet on liquid staking upside. Frax, you have to be bullish on the rest of that ecosystem, which I am. But if you were looking just for liquid staking exposure, Rocket Pool or Lido are your 2 bets. And there's still tokens that I hold. And Rocket Pool, I'm accumulating more aggressively. Lido, I still would like to accumulate some. I'm just, putting... What I do is, with my holdings, I always look at the TA as well. And what I'm seeing from Lido is, I would like to see a reclamation of that horizontal to buy a little more. But that position would be a swing position that I sell. My long-term position, I'm waiting for lower. So with altcoins, I split my bags up, usually like 70-30. That would be 70% if I like the project long-term that I'm willing to hold longer term. And then that 30%, maybe higher, maybe it's 50-50 during some points of the market, depending on market conditions. That 50% will be variable. So like swing trading / trade in and out, pair trading, basically, in and out of that position with that other half, with one half more stagnant. So the other 50%, the trading part of Lido, I'm waiting for that reclaim. The other 50% to add to that, I would be waiting for a bigger dip. And that's only the tokens I like long term. A lot of tokens I don't want to bag hold long term because I'll just wait. I'll just simply wait for like very, very, very amazing buy opportunities on really, really, really red periods in the market. And this isn't one of them. So still wary about buying like alts holding for long term, but decent protocols that I like. I think 𝗕𝗄𝗃 fits the bill there. I'll look for decent opportunities on that. Stacks as well. So there are exceptions. Like there are projects I still want to buy. Just because I don't want to hold every other L1 doesn't mean, there aren't projects I want exposure to. And so, stacks, 𝗕𝗄𝗃 from today's video. I actually don't even mind CFX long term. But, then you have projects like DYDX, which I like a lot as a trading exchange on Cosmos, but, it's just got severe dilution. So I'm still waiting for lower, maybe even $1. So, and I would even, maybe not Render. I think Render's decent, but I would make the argument for a lot of altcoins like IMX, Scala. I like them, but there's just dilution there that will prevent me from getting entries. I think Joe, I'm going to get a position in fairly soon. So there are altcoins that I want to get positions in, but if I'm buying them, I have conviction in them. And because I have conviction, I'm going to be willing to buy a lot lower. So if you don't have conviction in a coin, it's going to make it hard for you to not give back your position to the market when you get dips and actually instead buy more. One more thing I want to talk about. Actually, there's a couple more things. There's Litecoin and then there's meme coins. So on the Litecoin front, I think this is one of the less spoken about yet still pretty substantial trades in the market. And that's the fact we have the Litecoin halving in 80 days. So that's pretty substantial. Litecoin kind of being your Bitcoin fork, so to speak, your Bitcoin copycat. Not really loved by most of the market, not really loved by me either. But in terms of a pure trade, I think there will be trade opportunities here. On a side note, we've seen Lido activity increase a lot over the last week because Bitcoin's been so congested. People want to transfer on a trusted network. So a lot of them have picked Litecoin. A lot of people view Litecoin as the silver to Bitcoin's gold. I don't really think it deserves the praise of being called silver. But each to their own. Some people do like Litecoin. I've never really understood though why we need another Bitcoin. So I don't really get it. But from a pure trade perspective, I think there's a trade here. If you're a Litecoin bull, let me know. Sold some 𝗕𝗄𝗃 to trade PEPE. Well, I hope you made money on that PEPE. If you did, that's good because then you can just buy 𝗕𝗄𝗃. So crypto is all about opportunity cost. If you want to sell a position to make money elsewhere because you believe there's a better opportunity elsewhere, take that position elsewhere. As long as you're taking profits on it back into the thing that you sold, if you're bullish on it, play the short-term opportunity cost plays. So this is interesting. The case for Litecoin. If history repeats, Litecoin moves up for a solid 6 to 7 weeks, like Bitcoin we've seen. Litecoin halvings result in pumps, then puts in a top at the red dot at a 7 to 8 week period before the event. The Litecoin halving is 15 weeks away. Red line is 15 weeks before each past halving. Blue line is the actual day of the halving. Only a data set of 2, so low data set, but we're just looking at history here. So if history does repeat in 7 weeks' time, so there's 15 weeks to the halving, we know that it peaks 7 weeks before, so let's halve that and call it 7 weeks, 7.5 weeks, but we want to be exactly correct. But let's say 7 weeks before, it'll probably top. That means for the next 7 weeks, institutions like Litecoin, that is a factor. I mean, there are bullish things for Litecoin. There are bullish arguments. I don't really love it, but there are bullish arguments. You can make an argument for any coin, mind you, but there are arguments. But that would mean, just look at the previous rallies, that for the next 7 weeks, 𝗲𝗏 could be a good 𝗲𝗏. Why do I keep saying 𝗲𝗏? It's because the LI gets me. Litecoin would be a good buy, potentially. If history repeats, we'll see 7 weeks of upside potentially for Litecoin. Apologies for me keeping saying 𝗲𝗏. I don't know why it's confusing me. So if we just look at the chart from a pure TA perspective, I would want LTC to reclaim the 110 region. This would kind of be my next like key horizontal to flip. And then I think if we flip that, if this halvening thing plays out like it previously has, I think $1.70 is a decent target. I think $1.70 can definitely happen. Of course, we're still a 25 move away from that upside. So maybe the play with 𝗲𝗏 is to actually just get a little bit of a position on the retest of support, wherever it is, buying on diagonal support, taking some profits on that initial position if we move up to resistance. Once you break resistance, maybe enter back in the position as a confirmation buy, and then try and play this trade up, move your stops to entry. If it's an uptrend, that would be a decent plan. So I'm keeping my eye on this. I'm probably going to buy some of this just as a pre-halving trade, just based on the fact that it's done this twice before. It's looking exactly like the times before, actually. Like with your dip into the red zone, which is where we currently are. Dip into the red zone, pump, dump. Dip into the red zone, pump, dump. Dip into the red zone, pump, dump. Let me bet on this. I'm not 100% sold because of the fact it only has the data set of 2, which isn't a lot, but it's enough. It's enough for me, maybe because I'm a degen, it's enough for me to take the trade. It's enough for me to take the trade. If you want to trade on Litecoin, there's a link in the description to a few exchanges that have it. OKX has it. They basically on everything. OKX has it. You'll qualify for the Tesla thing whilst doing it. Bybit has it. You may qualify for the trading comp doing it. I think PrimeXBT also has it. LTC. Yeah, it does. That also has it, so you can get your deposit bonus there. 3 exchanges in the description if you want to do that. It's basically on all of them, which is handy because it's annoying sometimes when altcoins are only on some exchanges and you're in a certain country like the US and you can't trade it, but that's good. The other thing I want to look at is Bitcoin Litecoin. This is actually quite substantial for me. What I would want to see is a break above and a hold of the 3182 level. Litecoin. So break above, hold, consolidate, push up. Because this level is a pretty substantial resistance level on the Litecoin Bitcoin chart. And Litecoin Bitcoin is an important pair in my opinion. It was also a support level after the breakout. Well, it was resistance, flip support. Also acted multiple times here as support. So breaking above this zone would be pretty key. It's a pretty key level for Litecoin Bitcoin. So I would watch that. In fact, what I would love to see is actually a pullback from Litecoin on the USD pair. And then we see like a Bitcoin rally. That would mean that Litecoin could reclaim its BTC pair whilst giving us a USD entry. A bit tricky because I don't know how it's going to react if Bitcoin drops. It's hard to call it in terms of relative strength, but that's what I'd like to see anyway. I'd like to see a drop on USD, a reclamation on the BTC pair. But at some point, we're going to get a pullback back to this trend. And if not, well, no, we're already getting one now. And then if not, you can wait for that break of 105. But I think getting an entry early is better rather than just waiting. So I would get something in and then TP on that initial position, re-enter, kind of using that step ladder plan that I came up with, because that's kind of the blueprint for previous halvings that we've seen. See any comments on that? PEPE dumping. All right, let's look at PEPE. Yep, PEPE is dumping. So in terms of PEPE, if you do want to long this, really, really, really want to long this, I don't mind it at 1.4. I don't mind it here. But we did deviate below. So if you're longing, you would probably not need to use a whole lot of leverage. In fact, I would go spot, to be honest with you, or very low leverage. Or I would go leverage, but with enough margin to be able to long down to 10. And if you're wrong, willing to cut that position. So I don't think you can use a lot of leverage on this. I think this level I'm a buyer. But this is worrying. This previous zone. Maybe we come back down here. Maybe I go half and half. Probably I'll need to think about this after the show, but I'll probably go half and half. Half here, half here. Stop. I mean, even here I would buy as well. Maybe I just do 3 buys and hope for a move up to the upside. It's complete gambling. The reason I'm laughing is because it's not like TA on Bitcoin, right? TA on PEPE, it means a lot less than TA on other coins. So for me, it's just about getting entries that I'm comfortable with and then trading it for fun. Someone says stop gambling. Yeah, if you long this, it's a complete gamble. I think long term, this is a better short. But I don't know. My brain's just telling me that we're going to get another push from it at some point. So I'll probably long it. But it's the definition of catching a falling knife. So look, trade at your own caution here. But I don't know. I probably will just long PEPE just for fun. Just for fun. But I've already made quite a bit of money on this. You guys have to understand, like, I've already made an 8x. Since, like, from entry, I was public about this, by the way. I think a lot of you also got on with me. From entry, when I said I was buying PEPE to the top, it was a 17x. It was a huge move. So I don't think I made a 17x because I laddered out. So I made like a net 8x. So I'm already up now. If I put 10% of those profits back into speculation now, then that's fine. Maybe even 20% is fine. No, I'm still up 6x net, even if I get completely wiped on these trades, which I probably won't because I'll use a stop loss. So I'm happy with that. It's going to the earth. Well, yeah. You can also short this. Fair enough. If you want to short, wait for that break of support and then start shorting it. Generally, meme coins are losing a lot of steam. Free money. Jeremy, are you longing or shorting? Tell me where the free money is. If there's free money on the ground, I'm happy to pick it up. Too early to call. Pulse just came out. Oh my God, Pulse. What? Could someone tell me why do we need a fork of Ethereum? A network that barely works, mind you. Ethereum is not a very workable network yet. It's going to take years to become workable. Why would Richard Hart fork ETH? Why doesn't he fork Arbitrum or Phantom or something that actually has speed? Why fork literally the worst piece of tech in blockchain? I'm sorry, ETH. I love ETH. I hold ETH. It's, I think, my biggest holding now. I love it, but it's shit tech. Like, let's just admit that. It's shit tech. So I just don't understand why we need a fork of something that doesn't even work. Someone explain to me why we need that. I know there's arguments. Pulse reduces transaction time. It will slightly reduce gas fees, but gas fees on Pulse have been very high the last few days. Talk about timing, gaming, alt liquidity, how to play low cap gaming gems that have tanked. Beck has spoken a lot about this on his Twitter and stuff. I mean, with gaming, you want to buy those gaming alts because they are the riskiest, most stupid coins with no hype in the market, a lot of them. You want to buy those gaming alts when the market is freaking wrecked. So they aren't worth holding now because if we get a bad Q3, they'll get smoked the most. A lot of them aren't even making new highs, not new highs, new higher lows on the Bitcoin chart. They're still making lower lows. Cruiser says gas has been okay. I mean, yeah, it's still what, like $10, $5. Like, I guess it's okay, but it's not like Phantom or Arbitrum where you're paying like 1 cent or 10 cents. But yeah, when ARB pump, let's have a look at ARB. Since I'm going away, I'll keep going for like 10 minutes because I'm going away, so I want to answer questions. ARB, I would wait for a retest of 110. Lloyd says, great show. Yeah, I wanted to give you guys a lot of info today. So yeah, going on to the gaming discussion. For the gaming coins, you want to wait for them to reclaim key levels on their Bitcoin pairs. Right now, they're in huge downtrends, especially the small caps. A lot of them will literally be worth nothing soon. Potentially if they keep following that trend, which is a good thing because you'll be able to scoop up a lot of these gaming coins at freaking all-time lows, and a lot of them will be easy 10 to 20x's. I believe in 𝗵𝗏. I think they'll be easy trades. They're just not trades I'm taking right now, but they will be easy trades when they start to reclaim key horizontal levels on their Bitcoin pairs, reclaim new structure, bullish structure. then you want to look at which ones are actually building. So a lot of it is fundamental, right? Which ones are getting users, which ones are shipping products. You don't just want to buy random coins because they're gaming coins. You want to buy the ones with actual user growth, because even if you take, let's say, 20 bets on gaming and you build a gaming portfolio and you put like, I don't know, $1,000 in each and you're big on crypto gaming, you're better off doing $1,000 in that scenario into projects that have strong fundamentals, that actually have users. Because if you're doing it into 20 projects that are just random and you don't know anything about them, there's no real edge there. Like, you're just kind of going to hit a stroke of luck if one of them suddenly has a successful game. Whereas if you put money into projects you know have good products launching, are launching good products, have users, have communities, and you do that fundamental research first, when the move to the upside occurs for these gaming coins in general, those projects will move the most because they have the strongest fundamentals. And that can create a flywheel of, like, if the token price is going up and more people are playing the game because the token price is going up and it's a good game, it gets more users and gets more community and hype builds, and then the token goes up. It's kind of like a flywheel, right? So that's why fundamentals is going to be really important for these gaming projects. But yeah, waiting on a lot of them personally for like lower, because I want them to be dead and then I'll buy them. And then those will be some of the biggest gains for next cycle. I do believe what Pekka says, and Elio and Hustle and, you know, all those gaming guys. Like, I fully believe in them. I believe in crypto gaming. I actually think it's one of the strongest use cases for bringing in new retail into crypto, which is something we need, by the way, because right now there's not many apps that you'd want to actually use if you're retail. Gaming is one of the best use cases for that. So I think in terms of crypto in general, it's one of the most important niches to succeed in as an industry, because that's where a lot of retail is going to come from. And in terms of capturing upside, that industry will also capture a lot of the upside, because that's where retail is coming from. Because that's, like, we always know that the value accrued on the dApp layer will result in outsized gains versus the network. It's the fat protocol thesis. I think the dApp layers, they will accrue most of the value. So picking the top games, it's like a direct line to the new users, a direct way to benefit from the new users. But riskier if you're investing in individual games. Maybe you'll make the decision to invest in studios or infrastructure, you know, like EOS or IMX or PYR. By the way, PYR, I'm DCAing it too. So there are some tokens in the gaming space which I am buying now. But that's a long, slow DCA because I have conviction long-term in that project. For the riskier small cap ones, the ones you asked about, the low liquidity ones, the 5 million ones, the crazy make 100x on your money type ones, then I'm waiting for like much lower prices. Okay, they suck. A lot of them do freaking suck. The games suck. I agree. But think about what happened. Actually, think about crypto gaming for a second, all right? We had a bull run. Gaming was at the forefront of that bull run. The products were shit though. So price-wise, it was at the forefront. Product-wise, it was crap. We had the highest VC dollar amount invested in any sector in 2022 into crypto gaming. All right, 2022. So what happened was the bull run hyped it up. A lot of these projects raised capital to build. A lot of VCs realized the potential of crypto gaming during that period, and in 2022 started investing in it. Even Q1 2023, we've seen lots of investment into gaming. Those gaming projects only received their big checks last year. All right? Okay, maybe 2021. Maybe. But a lot of them, only 2022 is when they received checks. Like Q1, Q2. Like gaming ran in Q4 2021, right? It takes a while to get funding. It takes a while for VCs to come up with a strategy. So there's a lag effect. That's why it was, not until Q1, Q2, we started seeing a lot of VC investment into gaming. Now, how long do you think it takes to create a good game? GTA is the new one. GTA 6 has taken like 10 years. Call of Duty, well, they were releasing like a game a year, but, good Call of Duty takes a few years to make with a crazy studio developing them. Red Dead Redemption took ages. 5 years. I mean, most good games take 5 years. Most AAA games take 5 years, right? What makes you think 1 year after these gaming projects got their VC and money, or what makes you think they're going to have a good game a year later? Like, that's unheard of. The only franchises that are putting out a game a year are FIFA, 2K, Call of Duty. Like, there are franchises that are doing it, but the games, they have micro improvements. Like, FIFA 20 and FIFA 23, and I play FIFA, they're very similar. 2K 2015 and 2K 2023, like it doesn't seem like much of a difference because there's not. Every year they're so incremental. So to actually build that game from the beginning to even improve upon like the base game, it's going to take 3, 4, 5 years. Now, I do believe we're at the cusp of starting to see the makings of AAA titles because the ones that received their funding in 2021, we're in 2023 now, maybe 2024. After 3 years of development, we'll see great prototypes. We'll see games maybe even launch like a beta or like a version 1 and then upgrade them. But like, it's very unrealistic to expect quality games a year after they got their money. So I think you just have to start Far Cry. Yeah, there are many games that are consistent, but obviously like the base game took a while, right, to build. So you got to start thinking about, what was my point? My point was we're now at the point where it's been a year, maybe 2 years. Some games are now really close, but I think the majority of games are probably going to be 2024, 2025. But it actually lines up well with a bull run. Let's say you think there's a bull run in 2024. It could line up nicely if that's the case, because you'll actually start seeing a lot of games release their betas, their open testings, all that stuff, like great games, and they start to build communities. And then, that lines up with pretty like good market conditions, and then you'll see these tokens pump. So from a pure investment perspective, it could line up quite well. So I've got my eye on gaming. You have to tamper expectations with time frame when it comes to gaming. If you think it's going to be happening in 1 year, expect that same change to happen in 5. It's the same as crypto. Everyone thinks adoption's happening overnight. It's not. It takes decades to play out. But when it happens in a big way. And you just have to limit your expectations. That's my number one point. But yeah, gaming, I think, is going to take a few years. AZC is what I'm saying. Yeah, I mean, what I'm saying. I mean, yeah, it's going to take a while, bro. It's going to take a while. So I'm gonna wait. I'm gonna be patient. But when I buy, I'll probably make a big bet on gaming. Be one of my biggest sector bets. Probably like 20% of my old portfolio. I think maybe even 30 at times. We'll see. We'll see what happens. But definitely investing in gaming. Look, I'm DCing into a few good ones, but still waiting for those huge big bets on the gaming space. But I do have a lot of conviction there, more so than other sectors. But definitely have a lot of conviction there, and a lot of the stuff in the DeFi niche, I have a lot of conviction in, like the DEXs, I think are going to be huge. And speaking of a DEX, actually, I wanted to also talk about gains. I just wanted to note that it's doing a lot of Forex volume. Very interesting. Forex is like half to a third of total volume. It actually even at one point was flipping crypto volume. So interesting. A lot of people trading Forex, indices, commodities, on gains, and their daily volume I think had a 200 mil day the other day, so not bad. They did have a spike. We have seen a reduction, but it's holding up well. Considering volatility is so low, I'm actually surprised trading volume on gains is so high, and GMX and all of these other ones as well, because volatility usually leads to lower volatility, lower volume. So yeah, GNS is what I'm watching. If you actually do want to trade on gains as well, it's a very, very good exchange to trade on, especially if you want to use a DEX because you don't want a KYC, or a lot of exchanges are getting a bit tricky now. You just can connect literally your MetaMask to Arbitrum, Polygon, and trade. So that's pretty cool. And yeah, you have most alt pairs, like most of the big boys, and then you've also Litecoin. We spoke about that today. Then you've also got some of the USD like currency Forex pairs. You got gold, you got silver, a few interesting things there. You can obviously set your stop loss, limit order, etc. So if you want to trade on gains, link in the description. And yeah, if you want to use a DEX, there you go. Link to gTrade there. I'll answer a couple more questions before I head off. Solana will never go back to $10. Let me look at the Solana chart. Will it go back to 10? It could. Could and will are different things, though. Like, probability-wise, maybe not. Then again, though, I think if I could get a chance to buy between 14 and 15, that would be very good. But if we zoom out like onto like the monthly Solana chart, what we are basically witnessing right now is what I would say is like a general accumulation phase for next cycle. Like if you're bullish on Sol, this general range is probably going to be like an accumulation range. It won't go to 2027. It'll be like this, but yeah. It's your general range, I would say. If you're being super macro, like I want to accumulate Sol. Sol's a weird one. It's a weird one. I am pretty like bullish on the ecosystem in terms of like dev ecosystem. I'm bearish on some aspects of Sol, but you know, got to take the good with the bad. It's a bet I'll take. It's a bet I'll take. When everybody thinks Solana's dead, it'll pump. Yeah, for sure. I mean, Solana's not one I'm gonna fade. Although I think I don't think it's gone to its highs again. That was like peak Alameda market manipulation, bull run frenzy. But I think, you know, it can be like a 10x, especially if we go lower. Like, I don't know if I'm buying now. Actually, we are at decent support now if you do want to buy, but I would prefer to just buy like $14, $15, maybe less, maybe $10. Let's quickly look at the altcoin gainers for the day before I head off. Conflux. So, yep. China narrative. 𝗕𝗏𝗃𝗧. Toncoin. What is Toncoin? Like Telegram. I do know Ton. I just don't know that much about it. It's crept up the rankings, actually. It's ranked like 24 now. Crazy. Where's Sui now? Look at the fully diluted. I wonder where Sui is now. Still above Sol and AVAX. It's still at 11.3 FDV. Crazy. That's got to be a short at some point. Probably pumps, though, first. But at some point, I would love to short that. Telegram's coin, yeah. Banter bubbles. Yeah, let's use the bubbles. Let's get into the habit of using the bubbles. CFX pumping still. PEPE down a lot. 𝗕𝗏𝗃𝗃 up. BitGet up. Rockerpool, Frax, a couple of liquid Lido. So the 3 liquid staking plays here. Pumping. Sui up a bit. Litecoin pre-halving. So yeah, I think we got a finger on the pulse with the narratives we talked about today. I'm gonna head off now because I've got a lot to do before I head off to the US tomorrow. It's a long flight because I'm in Australia, so it'll literally be a 24-hour flight for me, basically, including airports and stuff. So I won't stream tomorrow, but I will have a video because I will record a pre-record. But I won't give a market update probably till Thursday. So it's going to be a couple of days because first day of Miami is usually intense. So I probably won't have time to stream. But I will be at the conference and we'll be live streaming from the conference and doing all sorts of stuff. If you are coming, make sure to say hi. It'll be awesome. All of the hosts are there. So come and say hi to the Banter fam. It'll be a lot of fun. And yeah, looking forward to it. Thank you guys for hanging out with me this morning for a bit of a long stream, but hopefully informative to show you guys the trends I'm looking at for the week. And I will see you live in a couple of days. See you in the next one. Peace.